Is Caterpillar an excellent dividend stock to buy? I'm going to answer that question in this video looking at 5 different metrics, starting with dividend yield and payout ratio. So let's get right into it. The dividend yield for Caterpillar stock is 1.9%. However, its payout ratio is only 36.39%. The payout ratio measures the amount of earnings per share a company pays in dividends, and the lower, the better. What that means is the lower it is, the more sustainable the dividend payment and the more potential for the dividend payment to increase, right? 36% means Caterpillar is only spending 30%, 36% of its earnings as dividends. That means there's room for it to grow its dividends. So even though it's just 1.9% right now, there's really good potential for Caterpillar to grow these dividends over time. The next metric I'm going to look at is Caterpillar's revenue, looking at the trailing 12-month revenue over the last 5 years. And what you see is its revenue has gone from about 48 billion before 2019 all the way up to 59.43 billion. So solid revenue growth here from Caterpillar. And the recent infrastructure bill here in the United States is going to fuel further spending, further demand for Caterpillar equipment over the next couple of years. So solid revenue growth over the last 5 years and solid prospects over the next 3 to 5 years as well. The next metric I wanted to look at is operating margin for the trailing 12 months, because it's one thing to generate sales, right? Anybody can make sales if you lower your price low enough, right? You'll buy anything at, well, not anything, but you'd be willing to buy a lot of things if the price was really, really low, low enough where the company's not making a profit. That's not the case for Caterpillar. Its operating margin has been increasing after dipping early in right after the pandemic. It's been soaring, right? It went from the bottom of 10.8% all the way up to 14.86%. A really good operating profit margin for a company like Caterpillar at the scale that it operates in, right? Nearly 70 billion in revenue we saw. So 60 billion in revenue at a 15% margin, that's a lot of profits. So that's good news if you're a dividend stock investor looking to generate passive income. Caterpillar certainly generates enough profits to deliver robust passive income. The next thing I wanted to look at is cash flow from operations. And again, looking at the trailing 12 months, if we go from the beginning here before July of 2020, we see Caterpillar's cash flow from operations is higher, although it has fluctuated. It was roughly 7 billion and that's grown to 7.766 billion. And the company's doing a good job turning its sales into profits. If you look at cash flow from operations divided by revenue over the trailing 12 months, you'll notice a double-digit percentage of revenue that turns into cash flow from operations, which is reasonable for a company like Caterpillar with such heavy capital cost structure, right? It spends a lot of money for the manufacture and sale of its equipment. Finally, I wanted to look at valuation. I want to see if the stock is priced reasonably or if it's too expensive. And looking at Caterpillar's forward price to earnings ratio of 15.6, the stock is certainly reasonably valued. It's trading at a lower price than the overall average valuation of stocks in the S&P 500. And to make its case look even better is that over the next 2 to 3 years, I'd say Caterpillar's got some pretty excellent prospects. There's a lot of projects that need to be completed that were delayed or they've been on backlog because of supply chain shortages. And there's a lot of green lit projects that the infrastructure bill in the US gave the okay for. So these are going to get underway and that's going to deliver a tailwind for Caterpillar. So, looking at that, I would say it's got a very good valuation, reasonable valuation, not expensive at all. And if you're a dividend stock investor, if you're a passive stock investor, if you're a passive income investor, remember you've got two sources of gains here. You've got your capital gains that you're going to benefit from after investing in a stock if the stock price goes up, and you're going to benefit from the potential dividend growth and dividend payments. So you got two sources there, and so you don't only look at the dividend payments, you also look at the valuation to see if there's an opportunity where you can make some capital gains on top of your dividend payments, give you double the benefits for investing in a stock, right? So to answer the question posed in the headline, is Caterpillar an excellent dividend stock to buy right now? I would say yes. I would say yes. It's certainly an excellent dividend stock you can buy right now if you're a passive income investor that's got a 3 to 5 year investment time horizon. All right, so that's all I've got for this video. I truly appreciate your viewership, and I hope to see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.